actually too good to be sharing here on the internet, YouTube, Twitter, whatever, dude. I don't care though. I believe code's a great equalizer, and everything I find it here live with you. So I'm gonna show you every single day, no matter what. I don't care how good it is, how bad it is. I don't care. I don't care. I don't care. I don't care. I'm gonna show you everything. Jim Simons is the person that I'm following. Jim Simons is the best algorithmic trader to ever do this. $31.4 billion. Do you think I need $31.4 billion? No way. I got the crib already. I'm good. So I'm just gonna chill and vibe out every single day and show you everything that I find, good, bad, or ugly. I don't care. I believe code's a great equalizer, and I believe this too, dude. This is what I really believe. If you help enough people get what they want, you can have whatever you want in this world, dude. 777, that's the vibe. I believe you can have whatever you want in this life if you help enough people get what they want. So let's get what you want. You want to automate your trading? I did too, dude. Well, why? Because, dude, looking at these charts going up and down, how do you trade this? I don't know. I don't know. So I'm just going to show you everything here. This is a too good to be true. So we're going to do some more testing in here in order to make it less too good to be true. You can see the Sharp's not crazy, but the Sortino's better, of course. It's Bitcoin. The heavily optimized, if we look at the regular return here, let's just look at the non-optimized return here. The exposure time 75%. So most of the time it's in there, but you can see it's a 29,000% return for buy and hold, but 192,726% for this strategy here, dude. It's too good to be true. So what I'm going to do today is I'm going to do everything I can in order to test it. Maybe some permutation tests, maybe some out of sample tests, maybe some walk forward testing. I don't know. We're gonna try it all, dude. But I believe code's a great equalizer. That's why I share all this stuff. And yeah, dude, just keep giving. You can have anything in this world if you lead with love. I promise you. I promise you, dude. You are your thoughts. They have to be positive, good thoughts. And you don't have to be, but if you want a good life. 64% win rate. Okay, best trade 30, worst trade. The drawdown is negative 63%. Now we used optimize, and overfitting is obviously a thing when you optimize with libraries like backtesting.py. But you can see here the return on the optimized one. I can't even tell you what the return is. It's like 2723. It's overfit, right? 59.87%. Okay, so this is all too good to be true. So what I want to do here is I'm going to just use O3 today, and I'm going to do a couple of different tests. First off, I'm going to say this. Here's the code. Please go ahead and walk me through all of the different types of tests that we can run in order to see if this strategy actually works, because it's too good to be true right now. So I want to do some out of sample testing, of course, and I want to do some walk forward testing, maybe some permutation tests. But give me your analysis of what the best test is to run first, and let's start from there. O3. I want to give it some of the stats. Did I give it the stats yet? I don't know. Yeah, okay. You can see all the returns and stuff of the non-optimized and the optimized here. So you can see that the returns are just disgustingly big. And it's too good to be true. So we need to do all the testing we can in order to see if this actually works in the past. Okay, and the reason this is important is because when you optimize backtest, you can overfit them. And I follow this process each day. The process of automating your trading starts with the research of trading strategies. So yesterday I just had an idea. It was a simple idea. And I just tested it and it looked really good. So I was like, okay, let me optimize it. Okay, so now it's optimized and now the stats are too good. Okay, so too good to be true. My mom always told me if too good to be true, it probably is. So just like anybody that's saying, hey, you can just go build a bot and make $1 bajillion, or you can just have my bot and make $1 bajillion, that's too good to be true, dog. If it's too good to be true, it probably is. Never run anybody else's bot. You have to build your own edge. This is a system I built. I use to build my own edge all day. The RBI system, that's all it is, dude. Process of automating your trading starts with research. That's the R. Research of trading strategies, R. Then backtest those strategies, see if they actually work in the past. That's the B, the RBI. Backtest. Backtesting is the process that we just did here to find these crazy stats on this return, on this strategy. Okay, well, after you backtest, and you see it actually works in the past, well, it might work in the future. So since it's just a might, I built a bot with tiny size. Okay, so that's where we're at now. But I want to do some more testing in between, and that's why we asked ChatGPT how we will go ahead and optimize it. All right, let's stress test this too good to be true monster in a systematic way. Below is a menu of robustness checks, why each one matters, what it tells you, and the order I'd run them in.
Don't run with the pack. If everyone is trying to solve the same problem, or a whole group of people, if that's the latest and greatest thing to do, don't do that. Do something original. Don't follow the pack.
Do something original, dog. Hold out of sample test. Do this first. Make sure the edge wasn't learned exclusively from the data you optimized on. Split the history into training, where you did your parameter search, and a completely unseen test segment. Typically splits 70% train, 30% test, or old regime versus recent regime. Past criteria strategy on the test set should keep at least 50% of the train set sharp. Drawdown profile should remain similar. And trade distribution, hit rate, payoff shouldn't fall apart. Okay, so let's do that first. Let's go ahead and split this data here. This is a little ghetto, but whatever. You know, I'm a ghetto dude, so it just is what it is. Okay. Let's go ahead and say split data. Split data dot py. Okay. And here, please build me a tool that will split this data into whatever percentages I want, so we can have a test set and an out of sample set. So if I said like 30% OOS and 70% IS, then it would take the first 70% as in sample and the last 30% as out of sample, and then it would save it right into the same data folder, starting the name with OOS or IS. Save it right back. Save it right back. Save it right back. Just keep running it back every single day. I don't care. Copy path. I don't care, dude. I don't care. I'm here forever. I'm not going anywhere. I'm sorry. I'm locked. I'm always going to be locked. You guys are going to leave. I've seen you guys leave. There's less people here than there used to be. Why? Because people are they're quitting crypto. Why would you quit? Why would you quit? Everybody's down bad. Let's step on the gas. Let's step on their head. Are you really a killer, bro? Are you really a killer? They down bad right now. Let's step on the gas. Let's step on the gas, dude. Come on. This is when we eat. This is when we eat, bro. Come on. Come on, dude. Come on. Don't stop. Don't stop. I know you had those thoughts. You want to stop now. Don't. Please. Thank you. Okay, let's run this. Let's split the data up. We got them split. Okay, let's say in sample first. Copy path. I know this is a little bit cheat, but I'm going to test it some other ways too. So let's go over to the strategy here, and let's put in the new, where is that? Where's the data at? .csv, okay. Okay, so this is test, okay, first up, hold on. Let's do this. This is the in sample. And then I want to go ahead and save this data. This is the OG data. Okay. I know this is kind of cheating, but whatever. I want to get a bunch of tests going. Okay. OG. Okay. .csv. Okay. Let's say the data path here. Let's call this the OG. The OG. And then this will be data path equals that. Okay. Okay, now let's see how it does on this data here. Am I still a Datadog or what? Is he still a Datadog or what? Okay, so I'm just going to do a bunch of tests up here. So first off, I'm going to go ahead and run this one. So this is the IS. Okay. And now let's run it. Damn, my fingers is quick today. My fingers is quicker. They quicker and quicker every day, dude. Look, hey, that's what the equity curve looks like, so you can see it. It's optimizing now. and I'm just going to be quick with it, and I'm not going to over optimize it. I'm not even going to look at the optimization. Okay, so you can see it's a 73,000% return versus buy and hold of 7,000. Drawdown, okay. So this is unoptimized because if you optimize it, then it's just going to be less real. I mean, you know, that's how I interpret it, at least. I'm only on year 4 though, so if you got ideas, let me know, please. I'm here just learning, showing everything all the time. Okay. 188 winning trades. Okay, so that's the in sample, and then we'll go ahead out of sample and see how I do. I haven't optimized it. This is literally the first idea I had with 10%. Okay, stop loss and take profit equally. It looks like it's profitable, but the drawdown is heavy. The drawdown is heavy, but here in the optimized one, the drawdown is not as heavy. Let's go look at it. Max drawdown negative 26. So, you know, maybe you can get it lower. Just be careful with over optimizing. That's why I run all my bots with tiny size, because just because it worked in the past does not mean it's going to work in the future. And you know that, dude. Maybe you don't. So now you do. Wow. Wow. So much knowledge coming at you every single day, my. Wow. Ow, the sample copy path. Wow. .csv. Okay, in sample, out of sample, data path. That's right, son. And then let's copy this, copy. And then I'm gonna have the AI talk to me about this. All right, let's see if this still works on the other data. Okay, it does. You can see that still works. Final peak, max drawdown 77. Drawdown days is 1,024. Okay, that's pretty heavy, B. That's heavy, B. That's heavy, B. That's heavy, B. Okay, I'm not gonna let it optimize. Let's see how this did over here. Profit factor 1.2, expectancy 1. Okay, sharp 000. Damn. Exposure time. Return is negative 14%. So it didn't work. And there we go. The flop. Okay, so here we go. I did an in sample and out of sample, and that's why you got to do those, dude. You got to test them on different datas. Okay, okay, you can see that my in sample did well, but my out of sample didn't. Please recommend what the next step I should have. What's the next step I should do in order to keep robustness testing this? I did a 70% train and a 30% test. Okay, let's go ahead and see what she has to say up here while she's doing that as well, my dear. Yes, please, thank you. Permutation test. Walk forward analysis. Rolling re-optimization here. Goal, simulate how you'd really run it. Predict periodically retune parameters, then trade the next chunk. Pick a window, e.g. 3 years, and a step of 6 months loop. Optimize on window T, trade on out of sample in window T+1, roll forward. Compile the stitched together equity curve for all OOS slices. Parameter sensitivity and heat map check. Make sure the edge is a plateau, not a single unsustainable spike. That's actually a good idea. That's a good idea. Run a grid, MA fast, slow, TP, SL. A wide neighborhood of parameters within, say, 10%, best sharp, razor thin, equals overfit. Exposure time, in sample. The buy and hold is 71% versus negative 14.9 in the last 3 years. 4 years, really. 1,300 days. Exposure time 77%. I want to test it on some other data as well. I think that would be interesting. Let's try this 1 hour, 5,000 weeks. Is that what it says? 500 weeks. 5,000 weeks. Jesus. Data path. I've done it on hourly or daily data thus far, so now I'm gonna try it with hourly. There it goes. Oh, bad. You can see it falls off a cliff early. Let's try it on some 6-hour data here.
No, it's what's called machine learning. So you find things that are predictive. You might guess, oh, such and such should be predictive, might be predictive, and you test it out in the computer, and maybe it isn't, maybe it isn't.
Maybe it is, maybe it
test it out on
isn't.
long-term
All right, so I'm grabbing 6-hour
data
BTC data real quick.
and price data and other things, and then you add to the system this if it works, and if it doesn't, you throw it out. So
Throw it out.
there aren't elaborate equations, at least not for.
Nothing elaborate around here, dude. What time is it? 9:09. We got a bit of time until the stock market opens here. It looks like Tesla is up a little bit. QQQ is down a little bit. Nvidia is down a tiny bit. Ethereum is steady. BTC is up a little bit. Okay, so we got about 20 minutes till that happens. You can see I'm getting 6-hour data here for 1,000 weeks, so that's a lot of weeks. But I'm gonna do I'm gonna use it on the split. I'm gonna use it on the split again. Let's go ahead and read what she has to say. Permutation test, randomization test, aka scramble the labels, quantify data mining bias, compute a p-value, break the link between price movement and entry logic while preserving distributional properties. 2 common flavors, return shuffle, randomly permute daily returns, keeping order of signals, signal shuffle, keep return path intact, randomly permute your long, short, flat signals, run the strategy n equals 1,000 times on shuffled data, build distribution of equity finals, sharp, see where the sharp sits, live sharp should be in the extreme right tail, 0.05. Monte Carlo resampling of trades. Understand luck versus skill by bootstrapping trade level results. Sample with replacement from your realized trade list. Rebuild equity curve 10,000 times. Evaluate distribution and CAGR. Max drawdown. The median bootstrap performance should stay positive, and the 5th percentile should not wipe you out. You can see I got the data here, so let's go ahead and data dog it. Let's go ahead and split it first. No, let's not split it because we haven't even seen it works yet. So, well, let's split it. Let's be careful. 6 hours, copy path here, and let's go to that data split here. Split data here. And we'll go to that split data part here and see what happens. Here we go. Let's split it first. Okay, it's split. Now let's go get the data, dog. 6 hour, in sample, out of sample, copy path. Coinbase data, close that. 2x. Let's try this one here. The 1 hour is trash. Most of it's going to be trash. Remember that. Okay, so this one looks like it. We'll see. This one's profitable. 2.61 expectancy. Okay, that's in sample, 6 hours. 72 days. Okay, 296 trades. The 6 hour data. Sharp ratio, trash. Sortino, though, 3.13. Remember, Sharp penalizes for the upside and downside. Exposure time, 86. Return, 37,000 versus 8,600. 8,600. Okay, so that looks pretty good on the 6 hour, but let's go ahead and try the 6 hour out of sample. That's actually right, dude. Good job. Good job, dude. Okay, so here we go. Worst trade, best trade. You can see this is profitable in sample and out of sample. There we go. Sharp is still low. The return is 161 versus 216. So not better here in the last few years. Interesting. I should have written those down. I can run them again. I'm really curious about actually the optimization of this one. But you don't want to optimize on the out of sample. Okay, so 6 hour looks decent. Decent. It's a little too high exposure time in my liking, but 6 hour OS. 6 hour IS. So let's flop that back. Okay, you can see this one was profitable, 37,000 versus whatever it was. Okay, so sweet. Sweet, sweet, sweet. I kind of want to get an optimization going for this 6 hour one, so I'm going to do that. Copy path. I'm just curious, you know? I'm just a curious cat. Because I'm using really random, and this is good that I use random, but constants. I don't want to over optimize, but I just put like random constants in there, like take profits and stop losses. So let's go ahead and say Python. Run that. Oh, I'm gonna have to conda activate T-flow, bro. There we go. So let's let it optimize here. I'll put it down here on the screen. And we'll come back to that. So currently optimizing the 6 hour. Wait a minute though. Wait a minute. 10 to 30, 10 to 40, take profit. Nah, this ain't it. This is 2. Because we noticed that the lower take profits do better. So lower take profits and stop losses here. We got 9:16 a.m. 9:16 a.m. Let's flip this to a more fun chart, maybe the 5 minute, so we can watch this open here in, I don't know, 14 minutes. Yeah. QQQ, Tesla, QQQ, down a bit, NVIDIA, BTC, Ethereum. Okay, you've seen everything. Let's go ahead here and say, let's see what she said here to this response. If number 1 looks good. Quick out of sample split code sketch. Okay, we already did that. Your OOS flop equals early warning that the edge you saw was probably SMA curve fitting alpha. Don't throw the idea away yet, but switch from searching for the perfect numbers to proving the concept can survive rough handling. Below is the logical next move and how to run it. Stress the parameters before anything else. Why? When you optimize 4 knobs at once, a single lucky combination can beat out a sample even if the underlying logic is okay. Here's what to do next. Step 1A, build a dense grid around the IS champion. Plus 10 bars. Produce a heat map of Sharp on the IS. Run every grid point on the same OOS slice you already used. Run every grid point on the same OOS slice you already used. Okay, so Send me the code for the full code for 1A and then 1B as well, so I can test both of those. Here's a single drop-in script that runs both robustness steps. Okay. Step 1A, dense parameter sweep on your in-sample data and a Sharpe ratio heat map. Okay. Step 1B, the identical grid of your out-of-sample data with another heat map so you can eyeball whether the edge survives. Just copy paste into robust SMA plateau. Adjust the 2 file paths if needed and run. Robust SMA plateau, parameter robustness test.
Make a choice, right? You just decide what it's going to be, who you're going to be, how you're going to do it. Just decide. And then from that point, the universe is going to get out your way. It's like it's water. It wants to move and go around stuff, you know.
Produces 2 PNG heat maps. Okay, so we got the path for the end sample and the OS. Okay. All right, let's go ahead and try to run this. I'm gonna call this 2x MA reversal robust SMA. All right, let's run this and see what the error is. Because you knew there was going to be an error. Copy path. Bug, please fix. Thinking. You ran into the version mismatch backtesting.py that shipped with Anaconda, TFlow, ANV. The keyword return history is not recognized by backtest.run. Newer releases added it. Okay. Simply drop that keyword. Okay. Here we go. So let's wait for this to be done. In the meantime, let's see if we can read a little bit more. What's up with the chat today, dude? I've been using some GPT like Lorenzen Python code to code some things, and I don't know if this is good AI. Can you help me out? Guide me? Sure, dude. Use cursor. Use cursor. Jeremy says my bot is stuck trying to find radium pools. Everything is running, but it can't make actual trades. Nice, bro. Yo, Art, what's up? 777KW2. Give thanks to the 777, for he is good. Be kind and compassionate to one another, yes. 777 Rico. For I know the plans I have for you, declares the 777. Plans to prosper you and not to harm you. Plans to give you hope and a future. All you need is hope, dude. All you need is hope, dude. All you need is love. What does 777 means? Dude, I got AI. That's beautiful. Do you have some prompts? I got mad prompts in my brain, bro. My brain is full of prompts. What type of prompts you need, cousin? ¿Qué tipo de prompts tú necesitas, mano? Dime. Since you said since you said since you said yo sé tú hablas español. Creo que. Me? No way. I don't speak Spanish. But sometimes I pretend like I do. Programador. Okay, maybe you don't speak Spanish actually. Because I thought it was programador. But hey, much love to you, regardless. Glad you're here. Let's see how this does. Okay, does it look like it's done? Is champion? I can't read this trash, bro. Can you? No. I think there's a bug or something here. Oh, there we go. Oh, this is the this one. The optimized one. It looks like it's trash. No, it actually looks really good, but look how many trades there is. There are. SQN profit factor is unbelievable. 1,600. Yeah, dude, this is too good to be true. So I'm just gonna probably pass on this one. But you can see the return is just trading perfectly. Can see all the red and green dots here. All right, so what I want to do though is take this and I want to do that in sample, out of sample on the best params. Okay, heat is saved. Perfect. Heat.is is saved. So let's go look at it. In sample heat on the left. Out of sample heat on the right. Base off sharp. I mean, honestly, I think I want to try this on I'll just tell her. Please help me analyze these heat maps that sent back. Also, make sure that it's saved to the data folder. We don't want to save to where you saved it. Also, this is crypto data, so I think it would be beneficial to look at the Sortino heat map as it doesn't penalize the downside or upside like Sharp does. One more other thing that could be cool to look at is the Kalmar ratio heat map. I don't know though. You tell me. Oh, 03, what you got, fam? So it thought for 14 seconds in sample. Okay. Can you see these? Probably not. Okay, let me pull this screen up a little bit so you can see it too, dog, because you're a data dog. You're a data dog. We're both data dogs. Let's make this a little bit smaller so we can get all on screen here. You can see that fully, yes. Yes, dude. You gotta leave. Peace, bro. Mira que pasa. Peace. Peace, programmer. Okay, let's read through this analysis here of this good fella. In sample IS, a big yellow green plateau from fast MA 7 to 20 versus slow MA 30 to 48. That's what you want to see. Out of sample, edge clearly survives but shifts downward. Sweet spot is fast 7 to 13 versus slow 30 to 45. So how do you interpret this? Okay, so you can see the slow MA here, the fast MA. Okay, we're looking for higher numbers here, so the yellow blocks. Okay, and over here we're looking for higher numbers as well. The sharp is 25, 35. Okay, lots of parameter combos
Imagine
work.
you had everything you wanted. Everything. Imagine you were everything you ever wanted to be. And capture that feeling. That's the easiest way to manifest what you want.
That's the easiest way to manifest what you want. Still a respectable plateau, sharp 0.9 to 1.3. Takeaway. The idea is alive, but the fast MA must be shorter than 15 for live trading. That gives you a clear rule for the walk forward test, restricts search space. Why bother with Sortino and Calmar? Sortino ignores upside volatility, great for moonshot crypto where big spikes are normal. Calmar is the return divided by drawdown, punishes long, deep drawdowns, perfect if you care about capital efficiency. Both metrics complement Sharp, so plotting them makes sense. If the Sortino and Calmar plateaus line up with Sharp, the edge is robust. If they diverge, you'll know exactly which risk dimension needs work. Drop in upgrade, save to your data folder, and plot Sharp, Sortino, and Calmar. Below is a patched version of the robustness script. Saves everything to robust test. Collect Sharp, Sortino, Calmar in one loop. Nice. Spits the heat maps. Beautiful, 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 beautiful. All right, so let's run it back. Beautiful, beautiful, beautiful. Life is beautiful. I'm gonna delete all these. Done. Books are freaking flying, son. They're flying. They're flying. Books are flying. Longs and shorts, dude. Longs and shorts. Longs get licked, shorts get licked. You know the game. Longs get licked, shorts get licked. Dun 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 dun. All right, 21%. Oh, the market just opened. Okay, let's go peep game. Excuse me. Sorry for burping in your ear. I hope you didn't hear that. QQQ is negative 21. 21. Tesla here. Dun 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 dun. 50% done, it says. %, 50%. One thing blocks it from going live is your soul balance. Your wallet has that much soul. A pump buy needs 0.01. No, it doesn't. Nah, dude, that's not true. But I will get some soul here. One thing blocks it from going live is your soul balance. Your wallet has that much soul. A pump buy needs 0.01. No, it doesn't. Nah, dude, that's not true. But I will get some soul here. One thing blocks it from going live is your soul balance. Your wallet has that much soul. A pump buy needs 0.01. No, it doesn't. Nah, dude, that's not true. But I will get some soul here. One thing blocks it from going live is your soul balance. Your wallet has that much soul. A pump buy needs 0.01. No, it doesn't. Nah, dude, that's not true. But I will get some soul here. One thing blocks it from going live is your soul balance. Your wallet has that much soul. A pump buy needs 0.01. No, it doesn't. Nah, dude, that's not true. But I will get some soul here. One thing blocks it from going live is your soul balance. Your wallet has that much soul. A pump buy needs 0.01. No, it doesn't. Nah, dude, that's not true. Right. But I will get some soul here.
Yeah.
Awesome, awesome, awesome. Awesome, awesome. One thing blocks it.
I was
from
just grabbing
going
some
live is
cheese,
your
bro.
soul balance. Your wallet has that much soul.
I was just grabbing a little
Pump buy
cheese. Give me a
needs
break.
0.01. No, it doesn't.
How to get some cheese, bro?
I had to get some cheese,
Nah,
dude.
dude.
That's not true. But I will get some soul here.
Little mouse, yo. You know what I'm saying? Snack on some cheese and breakfast cheese. Why not? Why not have a little cheese for breakfast?
One thing blocks it from going live is your soul balance. Your wallet has that much soul.
Why not?
A pump buy needs 0.01. No, it doesn't.
Alright, I'm gonna send all this to AI.
Nah, dude, that's not true. But I will get some soul here.
So, where is she? She right here?
One thing blocks it from going live is your soul balance. Your wallet has that much soul. A pump
Please
buy
walk me
needs
through all of the
0.01.
data
No, it
that
doesn't.
we got back here.
Nah,
And then
dude, that's not true.
teach me your conclusions.
But I will get some soul here.
Alright, let's look at them too. That was sick, bro.
One thing blocks it from going live is your soul
All right,
balance.
so,
Your wallet has that much soul. A pump buy
yellow's
needs
good.
0.01. No, it doesn't.
I mean, all of these are fire. They're like over 10
Nah,
Kalmar.
dude,
Not
that's
all
not
of them.
true.
A lot of them are fire.
But I will get some soul here.
Here we go. Oh, this is a big data file. She ain't gonna be doing nothing with this.
One thing blocks it from going live is your soul balance. Your wallet has that much soul. A pump buy needs 0.01. No, it doesn't. Nah, dude. That's
Okay,
not
so
true.
what the three metrics mean? Quick refresher.
But I will get
Nice,
some
that's a
soul
good
here.
one. Sharp is the total return divided by the total volatility. Good for traditional assets. Crypto specific nuance. It penalizes savage upside spikes just as harshly as down drawdowns. May undervalue moonshots. Sortino is the return divided by downside volatility. So sometimes better for crypto. Ignores those huge positive candles, better for BTC. CAGR. Kalmar is the return divided by max drawdown. CAGR. Compounded annualized growth return or something. Tells you how efficiently equity compounds given the single worst hole you have to crawl out of. Rule of thumb, Sharp above 1, Sortino above 2, Kalmar above 1, in out of sample land. Interesting, keep testing. Reading the heat map you produce, 2.1 Sharp. So the big yellow, green block from Fast, we already saw the Sharp, so 2.2 is Sortino.
We must keep moving.
Let's go get those.
We must keep going. If you can't fly, run. If you can't run, walk. If you can't walk, crawl. But by all means, keep moving.
So you can see here, this is the in sample Sortino. There are some spaces with 70 plus Sortino, which is nuts. This is the out of sample Sortino, and wow, it's a big difference. Okay, let's read what she says. Same band, 7 to 20, 30 to 48, but a few neon yellow outliers. Sortino equals 70 plus. Wow. Those are almost certainly statistical artifacts. Tiny max drawdown periods with goofy upside. With goofy upside, dude. That's a goofy. You goofy, bro. That's funny. Out of sample Sortino. Healthy Green Ridge, Sortino equals 2.5 to 4.5, sitting on the same fast, 7 to 13. Slow equals 30 to 45, strip. So the positive skew edge survives once we ignore the upside noise. Kalmar ratio here. IS Kalmar. Several. Come on, let's look at it first. So we're going to look at the Kalmar ratio. In sample, it looks like this. You can see that there's a couple yellowish green spots. Those are like the outliers. Then the in sample is this. Out of sample. Let's see what she says. The in sample Kalmar, several ridiculous 40 plus values at fast, 20 to 30, 23 with slow equals 33. That's one monstrous run with almost no drawdown. Ignore. It vanishes out of sample. OS Kalmar, the only cells with 3 plus sit at 7 to 9, slow 40 to 45. Everything beyond fast equals 15 collapses to Kalmar. What the trio tells you, edge is real, but parameter sensitivity. Keep fast MA under 13, sweet spot is 7 to 12. And slow between 30 and 45. Over optimized pocket around fast equals 20, blew up OOS. Those high in sample Sortino Calmar spikes were mirages. Good we caught them early. Nice. Risk adjusted reward is still attractive out of samples. Sharp equals 1, Sortino equals 3, Calmar equals 1 to 3 for a wide band. Passes the plateau test. Concrete next steps stage. Okay. Walk forward re-optimization. Y simulates live retuning and trading. Practical settings based on the heat map. Rolling 3-year in sample. Trade next 6 months out of sample. Grid fast 7 to 13. Slow 30 to 45. TPSL keep +1 -1 band. Okay. Permutation test. Estimate p-value versus data mining. Okay. Keep the signal sequence fixed. Shuffle returns 1,000 times. Look for p under 0.05. Trade level bootstrap. Luck versus skill and tail risk. Resampled trades 10,000x. 5th percentile CAGR should stay above 0. Transaction cost shock. Crypto fees spread. Double commission plus add 0.25 slippage edge should beat the hold. Files and folders. All your outputs are now dropped into this. Okay. Feel free to rename or move backtesting code. We'll pick them up anywhere. But this keeps the data self-contained. Verdict. Good news. The idea holds water once you keep the fast MA short. Caution. Avoid the tempting fast equals 20 cluster pure curve fit. Action. Roll the walk forward test with the restricted grid if it delivers sharp about equal to 1 or Calmar. Please send me the code for the walk forward test that you want me to run, and then we will go from there. Dun, dun, dun. Here's a ready to run walk forward script that rolls a 3-year optimization window, trades the next 6 months slice with the window's best parameters, stitches every out of sample slice into a single live like equity curve, prints slice level and aggregate stats, drops all artifacts into the data walk forward. Save it as walk forward MA reversal or overwrite an old file. Then hit run. Done, done, done. I'm going to call this copy, paste, walk forward, paste it in. Damn, I hit copy again, bro. I hit copy, I meant paste. All right, so you can see we're using 1 day. Okay. Trained, it's going to split it, fast MAs, slow MAs. Okay. 0.002 commission, so double. Double the commission because, you know, better than no commission. I'd rather use double commission than no commission. Bug, please fix. Send me full code. Thank you. You're using no commission. I'm using double commission. Bug, please fix. Send me back the full code. Thank you. Looks like Whiff making a move, huh? How big a move was that for the last week? What? What's up, bro? How you doing? That's cool. I didn't know you could do that. I'm chilling. How you doing? That's dope. I didn't know you could just start typing on this. No, you can't just start typing, but below it's a drop-in replacement. Thank you. All right, here we go. Looks Gucci now. Sharp 1.49. Sharp 2.04. All right, here we go.
So don't waste it living someone else's life. Don't be trapped by dogma, which is living with the results of other people's thinking. Don't let the noise of others' opinions drown out your own inner voice. And most important, have the courage to follow your heart and intuition. They somehow already know what you truly want to become. Everything else is secondary. Stay hungry, stay foolish.
Stay hungry, stay foolish. Stay hungry, stay foolish. All right, let's see how this did. I mean, we can see the stats here, but I want to give it to the AI 03 here because she's smarter than I am. Please go ahead and walk me through the data that we got back. Explain to me how it looks and how I can interpret it and how we can move forward from here. So let's go to that file here that we had, the data. It's actually not in robust, it's in walk forward. Equity curve, we can go ahead and reveal in Finder here. And I'm just going to toss this all into this lady here. See what she has to say. Then also let's go ahead and open them up so we can use our tiny brains as well. Tiny brain, big heart. Tiny brain, big heart. If anybody knows what that's from, you are permitted to let me know in the chat, please. Tiny brain, big heart. It's a little different than what was actually said, but tiny brain, big heart. If you know, please put it in the chat. Because I'll know you're a real one. But if you don't know, still okay. You're still dope. So you can see the walk forward stitched equity here. Okay. Curious as to why you're using Python for HTF when it's subpar and quite slow. High time frame. Did you mean HFT? Did you mean high frequency trading? I don't know how to respond until I know what you actually meant. So much love to you. Thanks for the question. Actually, it's not even a question. It's a statement, but you know, I know developers are like that. Let me just make a statement, not ask a question. It's all good, bro. You mean HFT? Is in what way you connect AI generated code to running Python without copying and pasting the code every time, sir? I just copy and paste the code, or I use Cursor. Cursor is here. I've been using O3 today, and you know, O3 is like 30 cents per run inside of Cursor. This is the AI IDE. So I'm just using my credits here, and I'm copy pasting it. Okay, what you just ran. Well, let's look at it with our eyeballs first. You can see the equity here. I think this is equity, yeah, equity here. So it goes up. That's good. The CalMar here. Let's go ahead and look at this. So this is train start, train end. You probably can't see this, huh? You're welcome, bro. Guess my other message didn't go through. Yes, Python for HFT. Now, I don't do HFT. That's the thing. So HFT maybe in a few years. The way I look at it is the lower time frames are easier for us newbies to get off on. So I've only been at this game for 4 years. I'll be here for a long time, and I feel like you just go smaller and smaller time frames over time. It's more competitive, HFT, and I may agree with you when I get there that Python's too slow. I do know Rust though, and Rust is super fast. So if I ever run into a problem with latency, a better word for latency is speed. If I ever run into a speed problem, I will probably use Rust, as I know that language. But yeah, I'm not doing HFT. Some people want to trade 2,000 times a day, and that's not me. Not me. Not right now, at least. Maybe later. Maybe later. Okay, so you can see this set here from 2016 to 2019. This set 2015 to 2018. This set 2016 and 2019. Max drawdowns here. Negative 27, negative 12, negative 17, negative 44, negative 39. The CalMars is 268, 3.6. Sortino 124, Sharp 1.4, 3. Okay, so I'm curious to see what she has to say. And also, if you like to give an opinion on O3 compared to O4, compared to O1, ... I don't know. I'm just using the newest ones. I got no opinion. How to read the results. Equity curve. Huge spikes. Flat lines. Spikes. That sawtooth is expected because every 6 months... Every 6 month slice reinitializes capital to 1 million for independence. 2020 to 21 bull run slice rocketed to $16 million. Then the slice starts again at 1 million. The plot plunges, which the max drawdown routine counts as negative 96% drawdown. Later slices trend up more smoothly. 2023 to 24 takeaway. Visually useful for seeing per slice behavior. Slice level metrics abridged here. So trade window, you can see the return from 2019, January 2019 to July 2019, 483%, 1.49 Sharp, 269 CalMar, 74 trades, early BTC bull pop. Then 20 to 21, 1,589, 1.3 Sharp, 2,986 CalMar, 82. That's a 2020 parabolic run. 21 to 21, so 1 to 7 again. Negative 8% return. 0 sharp, 0 Kalmar, 46 trade, flat chop after the blow off top. 2022-07 to 2023-01. -19 return. 0 sharp, 0 Kalmar, 35 trays, FTX driven bear shock. 2023-07 to 2024-01. 109% return. 2.43 sharp, 44 Kalmar, 57 trades, post ETF rally. Then the recent 6 months here is 41% return. 1.21 sharp, Kalmar 4.1, number of trades 48. All right, so average sharp is 1.04 across all slices. Edge survives regime changes. 4 losing windows, returns from -8% to -19% cap, the mean CAGR to 4.9 in the naive concatenation. Kalmar blows up for the 2020 parabolic slice because max drawdown inside that 6-month block was tiny. Once we reset the 1M, the metric loses meaning. Parameter stability.
You have to, in a business like this, just keep making things better, keep improving the system, because other parts of it are going to wear out after a while. People will catch on to this or they'll catch on to that. So you just have to, like in any business, you just have to make things better and better and better, because that's what everyone else is trying to do.
Every slice picked MA fast of 13, MA slow of 33. Or 42. Stop loss of 1%, stop loss of 3%.
Riverside es una ciudad y sede del condado homónimo de Riverside, California, Estados Unidos. ¿Quieres oír más?
What the Did Siri just pop up on my motherfucking computer, bro? About Riverside? California? What, dude? What? I don't want to know anything about that place. I literally don't want to know anything about that place. Why would you ever tell me that, Siri? And why are you even here? I didn't even know you were on my computer. The fuck? That was crazy, bro. What these numbers really say, concept survives, real walk forward. The sharp is over 1 with a tight parameter neighborhood promising. Risk presentation is distorted. Minus 96 drawdown comes from equity teleporting down when a new slice starts. If we compound slice equity, next slice starts with previous ending capital. The true max drawdown and CAGR will sit between the individual slice stats and the naive concatenation. Edge is regime dependent but not fragile. Positive slices align with trending BTC periods. Choppy bear slices lose single-digit % controllable with a simple trend filter or a volatility sizing. A trend filter or volatility sizing. Let's go ahead up here and let's go ahead and put these results up here. Results. Yep. Aggregated walk forward. Well, let's put them all in there. Why not? Recommended next steps. Rerun walk forward with compounding. Start capital equals equity last slice. Why you want this and what you'll learn is a true CAGR, max drawdown, and CalMAR. Add a trend filter. Should sidestep the 19% bear market slices. Interesting. I actually want to do that right now because that's a solid idea. So let's go up here before we get there. Let's say copy and paste. Copy and paste. Trend filter. Please update this code to only trade if it is over the 200 SMA. This is adding a trend filter. Okay, first off, let's get back to that regular data here. The return is 192,000%, so okay. And now let's go ahead and run it. Yo, what's up, Jermaine? What's up, Justin? 777 to you both. Much love. He's setting up his new PC. Old one burned up last week. Damn. Damn, dude. Almost back. Banana Dev, what's up, dude? 777, bro. Okay, so let's go ahead and read through this. Added a new 200 SMA indicator calculation. Only takes long positions in uptrend. This changes everything. We'll see how it does, though. Let's get rid of this. Well, let's keep this one. Hey, accept. It has the 200 now. Perfect. Please do not have these debug printouts because it makes it super hard to see the original stats. Okay, so here we go. Profit factors 2, 58, 301. How did it do compared to the OG? I mean, it got worse, but that stuff was too good to be true anyway, so. Shazam? Like the music Shazam? I love that. I love Shazam. Let's wait for this to be done optimized. I'm curious about that.
Don't even think about it, bro. Just keep going. Let them find out who it was. They gonna be on you.
Let them find out who you was. Oh, that's a good idea, dude. Just waiting for this to optimize here. Here it goes. Yo, I appreciate you sharing that. Okay, so you can see here, this is crazy. These are crazy equity curves. Too good to be true again. Worst trade, negative 22%, 776 trades. Max drawdown chart, 56. The return percentage is immaculately crazy, so I don't trust it. I don't trust it for a second. Volatility is infinity. Let's put the optimized result in here for funsies. Nah, I'm not even gonna put it in there. Let's go ahead and delete this file. It's too good. It's too good. I don't even want it. It's too good. I don't even want to do it. Okay, so let's go ahead and do this. Let's do P1. Let's do priority 1 here and send me back the full code. Thank you. Below is a self-contained walk-forward script with compounding. Each 6-month trade slice now starts with whatever equity the previous finished one. No more artificial reset. So let's call this walk-forward compounding. Copy, paste, rename. Compound. I always do that, dude. I always put the copy instead of the paste. I hit the C again instead of the V. Should only be hitting the V, dude. Okay, here we go. This will take a second. All right, here we go. So you can see the max drawdown is 52% here. Let's go over it with AI because, you know, she's fly and I'm just me, dude. I'm just me. I'm just mobbing. Above all the stats, please go ahead and walk me through them and your analysis, please. So let's go ahead here and say trading bot walk forward here. Yo, Dan, what's up? 777, dude. Good to have you here, bro. Compounding. Reveal and finder, please. And let's put both of these in there. And then let's go ahead and open them up. Okay, so this is not the one. This is the compounded walk forward. Okay, so looks like heat, bro. It looks like heat. And then equity curve CSV here.
Imagine you had everything you wanted. Everything. Imagine you were everything you ever wanted to be. And capture that feeling. That's the easiest way to manifest what you want.
I'm doing pretty good, man. Thank you.
A pump buy needs 0.01. No, it doesn't.
All right, so let's see what AI has to say about this. Number one,
dude,
headline
that's not
numbers,
true.
compounded walk forward.
But I will get some soul here.
100x at 9.5 years. Total return is 101,000%. Simple ratio, compounded slice to slice. The CAGR, 189%. Average geometric growth per year. Max drawdown is negative 52%. Worst peak to trough after compounding. The mean slice sharp here is the average of the 6-month trade
One thing
window.
blocks it.
The mean slice Kalmar here is the 259 slice level, inflated when drawdown is very small. Trade windows 13, 9 winning, 4 losing. What jumps out? The equity curve now makes sense. No more artificial cliffs. Growth is lumpy but monotonic. 2019 mini run. Flat 2020 Q1. 2021 is vertical. Let's go look at that vertical thing, dude. This is what we're talking about here. This is the analysis. Walk forward equity compounded. Please go ahead and explain how we did, or how and why we did the compounded versus the non-compounded walk forward and what the differences are. I kind of know them already, but I just want her to explain it because, you know.
One thing blocks it.
I swear I'm not a know-it-all. I swear, dude. I don't know anything. I just want to learn it all.
Pump buy needs 0.01. No, it doesn't.
Outsized CAGR is
dude,
the
that's
real
not true.
math, real math, but not real world scalable. When 1 million explodes to 16 million in a single slice, and the new capital is redeployed 1 for 1. Later trades assume tens of millions of BTC liquidity. Fine on Coinbase daily bars for analysis, but in practice, you capsize
that much soul.
or switch the percentage of
needs
equity
0.01.
risk.
No, it doesn't.
Risk is high but proportional.
Nah, dude.
Negative
that's not true.
52% max drawdown is ugly in traditional
But I will get some soul
finance, yet 1/3 of the 190% CAGR is 3.6 on the compounded curve, comparable to many quant equity funds. Yo, DJ, it's been good, man. How you been? Thank you. Regime dependence confirmed. The 4 losing slices match well known bearish or low vol BTC phases. Here's our trade slices 2018, 2019. Negative 10%. Post 2017 bear, still bleeding. 2020 to 2020, 01 to 07 is a COVID crash, then sideways. 01, 2022 to 07, 2022 is the Luna 3AC to Celsius meltdown. Wow. 2022 07 to 2023 01 is the FTX collapse. Is that really true? Is that then? Was that then? Yeah, I guess. Strategy is trend following in disguise and hates deep bear chop. Parameter stability still rock solid. Every slice kept is the MA fast equals 13 plus MA slow equals 33 or 42. TP1 SL3. Okay. No sign of parameter drift equals low optimization bias. What this tells us, Edge survives multi-decade simulation of Sharp over 1. Drawdown is tolerable relative to growth, but a 50% hole in psychological toe? Psychological top? What's this word? I've never heard it before.
Tough.
Tough? Is this how you spell tough? Psychologically tough. Dude, is that how you spell tough?
Tough.
I thought tough was spelled like this. Tough and tough are homophones, meaning they sound the same but have different meanings. Dude, how do you Google something to see what the definition is and then it uses a word that I don't know either? What's a homophone? Well, it answered it in the sentence, but that's crazy stuff, dude. The acceleration of learning here, it's crazy. It's crazy. Are you coming back tomorrow? Because we'll be back tomorrow. I know it's Saturday, but please come back tomorrow because tomorrow's going to be heat. Tough describes something as strong, resilient, or difficult. Tough, on the other hand, refers to a type of rock formed from compressed... What? I thought it meant hard, bro. Wait. Difficult. Yeah, tough. Tough. Okay, I'm just slow. That's it. I've just been spelling tough wrong this whole time. Scalability and liquidity becomes an issue once equity is over 30 to 50 million on a daily basis. You'd need position size caps or fractional allocation. Concrete next moves. Step A, trend gate. Skip trades if close is under 200 SMA. Should erase the 4 losing slices. One-liner filter inside next or wrapper that sets position size to 0. Volatility risk targeting. Fix per trade risk, say 0.5% of equity, caps runaway equity growth and limits drawdowns. Position size, liquidity cap, permutation test, trade bootstrap, fee slippage shock. Send me back the code for the 200 SMA filter on this exact same code. I want to compare them. Yeah, I want to compare the two, and then we can do a comparison.
Copy this code over here and say compound SMA 200. Oh, snap. But first, I want to go ahead and ask this or answer this question here because I did ask something in between. Please go ahead and explain why we did or why how.
Talent you have naturally. Skill is only developed by hours and hours and hours of beating on your craft.
Oh god, dude, my prompts are so gross. Please go ahead and explain how we did or why how and why we did the compounded versus the non-compounded walk forward and what the differences are. Variant, flat start walk forward, non-compounded. What we did, began every 6-month trade with a fresh 1 million bankroll. Optimize the previous 3-year window, trade the next 6 months, then reset capital to 1M and repeat. What questions and answers? Is this strategy profitable and stable independently of past gains? I.e., each slice is a self-contained live test. Hitting caveats, grows and draws down in percentage space. So overall return divided by drawdown becomes meaningless. Equity chart has vertical cliffs. Looks like a negative 96% drawdown. Compound walk forward. Same rolling windows and parameter search, but the ending equity of slice n becomes the starting equity of slice n plus 1. True compounding. If I actually reinvest my gains, how fast and how painfully does money grow? Real world P&L trajectory, liquidity permitting. Hitting caveats, later slices trade much larger nominal positions, so results assume you can execute tens of millions without slippage. Risk metrics now reflect real drawdowns, no slice independence. What each view told us, flat start view, slice level sharp equals about 1 across 8 years. Core edge survives regime changes. 4 losing windows pop out instantly. Late 2018, 2021 Q1, 2022 bear, and post FTX, good for diagnosing when the logic fails. Outliers don't distort risk numbers because every slice is capped at 1M. Compounded view turns the same 1M to a B. CAGR of 190%. True max drawdown is negative 52. Non-negatives 96. Calmar equals 3.6. Profitable relative to pain. When to use which? Use case: debugging parameter stability, detecting optimizer over fit, flat start. Stress testing strategy logic under different market regimes, flat start. Sizing expectation, compounded wealth path, investor pitch deck, compounded. Calculating realistic leverage, use compounded. Key takeaways from running both. The edge is real, but trend dependent. Flat start slices isolate problem regimes. Compounded curve shows they merely pause long-term growth. Risk looks scarier in the real world. A 52% hole is survivable but requires iron stomach or a trend filter and position cap size. Liquidity matters beyond backtests. Compounded equity assumes you can move 10 to 100 million notional on BTC. Next step as discussed, add a trend gate. Okay. Introduce risk-based position sizing. Okay. Permutation and bootstrap tests. I asked for the full code back of the compounded with the filter, the simple moving average filter. Trend gate. So let's grab all of that code here. And let's run this. So this will take a minute and I'll answer any questions here in the chat if you have them. How's your week been? Good, man. Thank you. I got access to the Bloomberg terminal at university. Is there anything you're curious about? What should I try first? I'll be able to start using it at the end of May, but until then, I'd like to prepare. Sheesh, I don't know, bro. I've never used the Bloomberg terminal. I've never seen it, honestly. Never seen it, never used it. Never been curious about it. Yeah. What do you think? What do you think? What are you gonna try? And by the way, how did the Google arbitrage work out? I didn't end up pursuing it, actually. Where did you get this from? Quote unquote Google Scholar, question mark? I don't know, bro. I just thought of it. What do you think about Monte Carlo market simulation? I believe if a strategy could work on simulated market, it would work on real. I think Monte Carlo is a good test to run. Maybe we'll do that here. It's just about building confidence. So building confidence in your strat. Okay, so let's go ahead and give this data here. And then also there should be some more information. We got the mean sharp, the mean Kalmar 97. Okay, that's solid. CAGR 114. Total return for 14,000% here. Data here, equity curve. Okay. Reveal in Finder, please.
Your time is limited, so don't waste it living someone else's life.
All right, so I have attached all the data here. Please go ahead and Walk me through it, compare it to the original without the 200 SMA. Tell me which one's better, and how you came to that conclusion. Yo, I don't think Twitter chat getting forward here, G. Just thought I'd let you know. Thank you, bro. Thank you, dude. I don't know why. Maybe it's just me, though. Maybe. Maybe. It's just using Restream, so. Quick side-by-side of the two compounded returns. Okay. You can see here, quick side-by-side, the final equity is $1 billion here on the first side. And 143 on the second side, so minus this 86. We saw that in our test too. We ran it. We ran this, but I'm glad that she's seeing the same thing. I wonder what she has to say about it though. Total return is 101,000% versus 14,000%. Dun, dun, dun. Dun, 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 dun. Dun, 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 dun. Bum, bum, ba-da. So you can see the CAGR 189% versus the 114%, so down. Max drawdowns negative 52% versus negative 71%, so down. It's actually not better to have this. Mean slice sharp, down. Losing trade window, up. Verdict: the simple 20 reduce return and increase risk. What actually changed and why? Observation: missed early 2021 vertical run, equity top now 75 versus 760 ounce. BTC closed its 200 SMA until late 2020. The filter sidelined the strategy during liftoff that produced the monster gains. More negative slices despite bear filter. The filter kept you out of the rebound legs that usually recoup drawdowns. You sat in cash during recoveries, but were still hit by the intraday whipsaws that triggered stop losses once price poked above the 200 SMA. Big lick here. Big lick coming here on BTC. Oh my God. A $12.6 million liquidation. We have to look at that. What is going on over here? A $12.6 million, dude. Imagine that on a Friday. Imagine that, dude. Holy smokes, dude. He got smoked there. He got smoked. The boy got smoked. Let's put it there. 12 point something. 12.6 M. What was it? I think it was 12.6 M, but I can look it up. Yeah, 12.6. That's a big lick, dude. See how the price reacts to that. Does it fly through or does it bounce? I don't know. I'm not here to say all that. I'm just here to watch. He says test. Your test went well, Anonymous. You and Encrypted both got weird ass names. Anonymous and Encrypted. We got some dorky dorks in the chat. That's good to see. I love my dorky dorks. I'm a dorky dork too. I'm a data dog. That's my cool way of saying I'm a dorky dork is I'm a data dog. Okay, I'm a data dog. You're a dorky dork. Anonymous and Encrypted. And Moondev. Anonymous, Encrypted, and Moondev. Okay, let's get it, dorky dorks. I love you. I'm so glad that you're here. Okay, so more negative slices despite the bear filter. Max drawdown is worse. So equity curve now spikes later, mid 2024, and then retraces. With a smaller capital base, the percentage pullback looks deeper. He said, I've been talking for a mean minute. Where you been talking at? Okay. I see what's going on. You got the same name-ish kind of. I'm super curious to see how this reacts here to this $12.6 million liquidation. That is huge. That is absolutely massive. And we didn't see one on anything else yet, which, you know. We good on Twitter now? Of course, Encrypted and Anonymous are the same person, dude. Of course. The filter did trim some downside noise. Which version is better? Pure performance and risk-adjusted return, original. Higher Sharpe, lower drawdown, smoother equity at any cost. It deepened the drawdown. That's interesting to see. Compliance with position size, liquidity limits. Both need a notional cap. SMA filter doesn't solve that. So the raw MA reversal without the trend gate is superior on every headline metric. Why the SMA 20 idea failed here? Daily BTC already trends hard. When it flips 200 SMA, the move is often halfway done. Strategy is mean reversion and breakout hybrid. It actually profits from the early transition zone. Around the long MA, the filter removes that sweet spot. 6-month trade windows are short. If the filter keeps you out for 3 to 4 months, you miss most of the slice's opportunity. What to test? Let's do that first, actually. Let's see if that makes it better. Let's make a shorter trend gate. I'm sure I can figure this out. Right? Change the trend filter from 200 to 100.
Make a choice, right? You just decide what it's going to be, who you're going to be, how you're going to do it. Just decide. And then from that point, the universe is going to get out your way. It's like it's water. It wants to move and go around stuff, you know.
Remember the imbalance from the start of the week from the Hyperliquid 3D map? Yes, but I don't remember what the imbalance was. Was it showing more upside? I mean, probably. Is that what you're saying? I don't quite remember when that time was that you said that, but I do remember you saying something about it. Okay, let's see how the 100 does. All right, here we go. I forgot to show this, dude. None of this is financial advice. I'm not a financial advisor. I need to show this every single time. Let's go ahead and give this data here to the AI and say, I went ahead and tested it with a 100 instead of a 200. Here are all the details back showing you how it did. Please go ahead and do an analysis now that we changed it to 100 instead of 200. Quick scorecard, the 3 compounded walk forward variants. No filter, okay. No filter, the max draw. Okay, so the SMA filter makes the max drawdown much better. The Calmar is better as well. Well, that makes sense because the drawdown's better. The equity's not higher, the return's not higher. Risk profile, max drawdown collapsed from 52% to -72% to -20%. A huge change. Return fewer deep valley returns. Return posture. CAGR dropped versus no filter, but still outran SMA 200 and buy and hold BTC. Total return shrank 5x with no filter because you sat out the craziest part of 2021 melt up. But it's still a 214x on capital. Efficiency, Sharp jumped from 1.03 to 1.41 because volatility fell faster than return. Only 3 losing slices here. Why the SMA 100 beats the SMA 200? BTC often clears the 200 SMA late into a bull run. 100-day lets you re-enter a few months earlier and ride mid-trend legs up. In bear markets, the 100-day still sits above price, so you avoid the worst bleed while jumping back in sooner for rebounds. Which version is best? Goal, maximize dollar return, can stomach 50% drawdown, then it's no filter. I just need smoother, smaller trades. 200 SMA. Best risk-adjusted growth here is the SMA 100. Sharp 1.4, Calmar 6.4, DD only 20%. That's nice, dude. That's real nice. Next tuning levers, position size cap, ATR risk targeting. Dynamic volatility filtering. Keep 1% equity at risk per trade or 10% or 10 million notional max. Okay. Should rein the 200M to 1 billion notional assumptions of the raw backtest. Dynamic volatility filter require a 20-day ATR over price. Permutation test. Okay, dude, sick. I'll be right back. I gotta take a whizzle. Remove all emotions and actually automate your trading. I can show you from a point of not knowing how to code at all. If you don't know how to code at all, I can show you exactly how to code, and then I can show you exactly how to automate your trading. You can see there's hundreds of reviews. I'll show you at the bottom, and there's a 100% money back guarantee, and the price is super inexpensive, $69. And I will literally hold your hand step by step in the process of automating your trading. You can watch this video if you want to learn a little bit more about it, but we can quickly scroll through here, and pretty much everything that I wish I could find on the internet when I was trying to automate my trading is in this bootcamp. It's 15 days of videos that you can watch on demand in any language, just in case you don't speak English natively. You can watch all videos at any time period of the day in any language. And I show you step by step how to automate your trading. And not only that, I give you free AI. So I pay for your OpenAI, Claude. We have channels in our Discord that give you 100% free AI so you can cancel all your subscriptions. You have a team of us that are all working towards the same goal. We're all chasing this guy. This is Jim Simons. He ran up a net worth of $31.4 billion. And he always says you just have to make your systems better and better and better because that's what everybody else is trying to do. So I can show you step by step how to get your ideas out of your brain into an automated trading system, and you'll be able to code all of it. I spent 10 years in technology scared to code because I thought it was just for super smart people who went to Stanford or knew a bunch of math, and I was neither of those. Then I locked in because I had to automate my trading. I learned Python and I learned how to actually automate my trading. It's the most secretive industry in the entire world. Nobody else is sharing this information. So you can see a closer look of what's in the boot camp here. There's 15 full days. And on the first day, in case you don't know how to code, I show you how to code. So don't worry. I give you an intro to algo trading. I get all of your orders set up, all your risk management set up. I get you to a place where you can backtest any strategy that you have for the rest of your life. So while I don't just say, hey, here's a bot that you can run, make $1 million, I think that's a scam. If you ever see that on the internet, which I know you will, just run away because nobody is going to give you a trading bot that just makes you a bunch of money. You have to come up with your own strategy and your own edge. But for a crazy low price, I can show you step by step how to get to that point where you can just sit here like I do. You see me on live every single day. I show everything on YouTube. And I just test the RBI method.
We must keep moving. We must keep going. If you can't fly, run. If you can't run, walk. If you can't walk, crawl. But by all means, keep moving.
And dude, I understand how emotional this game is, and sometimes you feel defeated because you're just tired of looking at these charts go up and down. You have FOMO, and then you have fear, and you're scared. You're in a position, you're in a long position, then all of a sudden you're in a short position, and all of a sudden you're using 40x leverage. Dude, I totally understand that. But that was Martin Luther King Jr., and he says, if you can't fly, then run. If you can't run, then walk. If you can't walk, then crawl. But by all means, keep going. And I know trading can rip your heart out. The sad thing about trading, which is like not good for entrepreneurs or people who like to work really, really hard and just bang down doors and get anything done, like you and me, dude. You know, we're ambitious, we're data dogs, we're curious, we're fearless. You can't just work harder at trading and get better. You can't just put more hours in. Like everything else in the world, most things you can just put more hours in, work harder, and be better at trading. With trading, you have to have patience. You cannot be greedy, and you can't be fearful. Those are 3 things that humans just can't do. So in this bootcamp, I show you step by step how to remove all of your emotions, automate your trading. I give you free AI. I give you a bunch of examples of trading algorithms that will enable you to then build any strategy that you want. And then I connect you with hundreds of other algorithmic traders so you can make connections for life and work on this with other people opposed to just on your own. Remember, this is the prize. This is what I'm chasing, but I don't need $31 billion. I would rather have a few hundred of us get $31 billion, you know? So I'm not saying that this is guaranteed by any means, but for me, it's something that I can invest my time into and just like he says, just keep making my systems better and better and better. Now I've been at this for 4 years. So if you want to fast pass and get everything I know about algorithmic trading and how to automate your trading. You can see the prices right here. It's $69 per month. It's nothing crazy. And you can go to our Trustpilot, just Google MoonDev reviews or Algo Trade Camp reviews. Here's some Q&A down here. I want to make sure you know that we have a no questions asked 90-day money back guarantee. So for whatever reason you want your money back, just get your money back. You can keep all the code and just all the videos, just you get your money back 100%. I follow the Costco guarantee here. This is the 90-day money back guarantee. Go ahead and check out the link in the description and just scroll down and see what people like you have to say. I know you're smart because I didn't run ads and I didn't beg you to come here. You found me somehow. You're a good researcher already, and the process of automating your trading starts with research. So obviously, you're looking for a better way to automate your trading, so you're intelligent enough to know that everything can be done in this world as long as you're able to research. This is my RBI system I'll talk about in the Algo Trade Camp, but it comes down to researching, backtesting, and implementing. So go do your research on the internet. Go look at all of these testimonials we have on our page. And if it seems like it's going to be a good fit, if you want to automate your trading, remove all emotions, connect with hundreds of other algo traders, connect with me, get free AI, have the 90-day money back guarantee, then click the link below and join right now. Remove all emotions and actually automate your trading. I can show you from a point of not knowing how to code at all. If you don't know how to code at all, I can show you exactly how to code, and then I can show you exactly how to automate your trading. You can see there's hundreds of reviews. I'll show you at the bottom, and there's a 100% money back guarantee, and the price is super inexpensive, $69, and I will literally hold your hand step by step in the process of automating your trading. You can watch this video if you want to learn a little bit more about it. So I think the next test I want to do is a size test. Send me back some code that tests sizing. So we'll always use 25% size. And make this a constant so we can change it. So below is the plug and play of the SMA 100 filter on it. Okay. Compound. $25 perk. Copy the code over. And let's run it. I get this bug, please fix it. Let's use whole units, but please send me back the full code.
Make a choice, right? You just decide what it's going to be, who you're going to be, how you're going to do it. Just decide. And then from that point, The universe is going to get out your way. It's like it's water. It wants to move and go around stuff, you know.
Um, all right, let's check this out. I also want to test this on a different asset. So I want to grab, let's paste this, and then let's run this. Damn. Focus, bro, focus. Okay, so you can see it's running now. Now let me unfocus here and grab some new data here. I want to try it on Ethereum because that's the next biggest symbol here. ETH here. One day. I'll grab that after this. Okay, I want to do that test here. These are the results of the one that has 25% size. Please walk me through the comparison versus the others. Thanks. The 3 SMA variants so far. Risk 25%, 214 million ending. 100% is a billion. Max drawdown 19% CAGR. Okay. Big Solana liquidation here. Let's go look at it. Damn, longs and shorts are getting liquidated as usual, dude. Trump is going crazy, actually. Risk 25% rounded down to the integer. Always risk 25% fractional units allowed. What the whole unit cap really did. Full 25% early on, 6 to 10K when you deploy 1 to 4 BTC. Later, buys only 500. Fractional of the intended exposure. Oh, snap. I got to let this run. Sorry for the ADD, but... that's how the show goes on, dude. That's how I'm here all the time because my brain be going all over the place. Okay. Drawdown cratered. Okay. Sharp per active slice shot up. Which sizing rule is better? Highest risk adjusted return while still BTC hold. Fractional 25%. CAGR is 128. Drawdowns 20. Realistic position sizes on spot or perpetuals. We got the data. I'm a data dog. But heck, you already knew that. If you need ultra tiny low drawdowns for a tiny discretionary sleeve, maximum dollar return here. Recommendations going forward. Use fractional sizing plus notional cap. Or risk trade per trade, ATR stop model. Run a fee slippage test. All right, let's test this Ethereum data here. Because I feel like we've done a lot of testing to see if this is robust or not. It looks pretty good. In the ChatGPT, you use only one chat or jumping in multiple. I use one chat. I move when I need to, when it gets too big or something. The Coinbase data, we got the Ethereum 1 day now, copy path. And let's split it first. Let's split it. Let's split it to have in sample, out of sample. Split data here. Okay, we got it. Let's grab that data here. Coinbase data here. In sample. Copy path. Let's go to the original backtest here. To a reversal. Data path. Let's go ahead and put in the in sample. And let's run it, dude. You can see it's optimizing now, but I got the P&L curve here. So final is 8 million %. Expectancy 5.98. Sharp ratios kind of low. buy and hold return is
Damn near
13,000%.
anything we could think is real. And if it's not, we could create it. See, that's the gift we were given. To evolve, advance, create. I create my own world.
I create my own world. So this is nutsy, dude. Nutsy, bloodsy. Here's the optimized version, which is even nutser, probably. Profit factor 4.5. Returns unbelievable. It's too good to be true. It probably is. It's too good to be true. It probably is. Okay, let's check out the out-of-sample or the. Oh, we didn't do it on this first. Damn, I did it on the full data first. My bad. Let's check it with just the IS. Copy path here. It's too good to be true. It probably is. Okay, let's check out the out-of-sample or the. Oh, we didn't do it on this
Really good
first.
as well.
Damn, I did it on the full data
Expectancy
first. My bad.
5.9.
Let's check it with just the
Buy and hold
IS.
is that, but this is the return for that.
Copy path here. It's too good to be true. It probably is. Okay, let's check out the out-of-sample or the. Oh, we didn't do it on this
Really good
first.
as well.
Damn, I did it on the full data
Expectancy
first. My bad.
5.9.
Let's check it with just the
Buy and hold
IS.
is that, but this is the return for that.
Copy path here. It's too good to be true. It probably is. Okay, let's check out the out-of-sample or the. Oh, we didn't do it on this
Really good
first.
as well.
Damn, I did it on the full data
Expectancy
first. My bad.
5.9.
Let's check it with just the
Buy and hold
IS.
is that, but this is the return for that.
Copy path here.
So let's try this, but out of sample. So it looks good on both, or the.
It's too good to
that
be
one
true.
so
It probably
far.
is. Okay, let's check
And then
out the
let's check out
out-of-sample
OS.
or the. Oh, we didn't do it on this
Really good
first.
as well.
Damn, I did it on the full data
Expectancy
first. My bad.
5.9. Still
Let's check
looks
it
good
with
on OS, I
just
believe.
the buy and hold is that, but this is the return for that. Copy path here.
So let's try this, but out of
trade is
sample. Negative 32%.
So it looks good on
Max
both.
drawdown's
or the-
pretty
It's too good to be
high.
true. It probably is. Okay, let's check out the
Return is
out-of-sample or
103%.
the.
First buy and hold of 7.3.
Oh, we didn't do it on this
So
good as well. Damn, I did it on the full data
Expectancy
first. My bad.
5.9. Still
Let's check
looks
it
good
with
on OS, I
just
believe.
the buy and hold is that, but this is the return for that. Copy path here.
Honestly,
So let's try
looks
this,
better
but
than
out of
first trade is
sample.
negative 32%.
So it looks good on
Max
both.
drawdown's
It's
pretty
too good to
high.
be true. It probably is. Okay, let's check out the
Return is
out-of-sample or
103%.
the.
First buy and hold of 7.3.
Oh, we didn't do it on this good as well. Damn, I did it on the full data
Expectancy
first.
that makes me
5.9.
think. Still
Let's check
doesn't
it
look like
with
on
just
Solana,
the buy and hold is that, but this is the return for
it's kind
that.
of biased. That's kind of
Copy path
selection
here.
bias. Right?
So let's try this, but out of sample.
Negative 32%.
So it looks good on
Max
both.
drawdown's
It's
pretty
too good to be
high.
true. It probably is. Okay, let's check out the
Return
out of
is
sample or
103%.
the.
First buy and hold of 7.3.
Oh, we didn't do it on this good as well. Damn, I did it on the.
So I'm grabbing the data for Solana for as much as I can get, really.
There it goes. And let's do that same split here. Let's put it in the split data here. Let's go ahead and run it. So now I have the split Solana data here, in sample, out of sample, copy path. That's what it looks like here. Max drawdown 64%. That's pretty heavy, B. That's pretty heavy, B. See what the stats look like. Win rate 62%. Buy and hold return is 357 versus return percentage of 14437. Sharp is 0.877. Kalmar is 0.8 or 8.19. Best win rate, lose rate, or worst trade, best trade. Win rate is 62%. This is fascinating, dude. This is fascinating that I just show all this here on YouTube. Oh, God. He doesn't care. He just doesn't care. He truly believes if I help more people, I'm going to be more successful. So I'm just going to keep sharing. That's my belief, and you can't take it away from me because you can't change somebody's belief. No way. This one looks like it's not profitable on the out of sample, though. You see it there. And then let's go ahead and see here. So 0.75. So it did not make money. The buy and hold here. So, you know, this has been a very interesting experiment. You've seen a lot of this is profitable. A couple of them were not profitable. We did a lot of robustness testing. We did a compounded one, a compounded trend gate one. I didn't like this one. I'm going to delete it. I'm going to push all this to GitHub right now. So let's go ahead and say new terminal. Git add dot. Git commit. Trend reversal backtest looks good with robustness testing. Git push. Okay, so this is all on GitHub now. I'm gonna show this actually in the inner circle here today. So that's in a few hours. No, sorry, in about 30 minutes. And from there, I guess I'll just see you when I see you. Come back tomorrow because you know I'll be locked in tomorrow. So make sure you're back here tomorrow, same time, same place. Much love to you. This trading bot is actually too good to be sharing here on the internet, YouTube, Twitter, whatever, dude. I don't care though. I believe code's a great equalizer, and everything I find it here live with you. So I'm gonna show you every single day, no matter what. I don't care how good it is, how bad it is. I don't care. I don't care. I don't care. I don't care. I'm gonna show you everything. Jim Simons is the person that I'm following. Jim Simons is the best algorithmic trader to ever do this. $31.4 billion. Do you think I need $31.4 billion? No way. I got the crib already. I'm good. So I'm just going to chill and vibe out every single day and show you everything that I find, good, bad, or ugly. I don't care. I believe code's a great equalizer, and I believe this too, dude. This is what I really believe. If you help enough people get what they want, you can have whatever you want in this world, dude. 777, that's the vibe. I believe you can have whatever you want in this life if you help enough people get what they want. So let's get what you want. You want to automate your trading? I did too, dude. Well, why? Because, dude, looking at these charts going up and down, how do you trade this? I don't know. I don't know. So I'm just going to show you everything here. This is a too good to be true. So we're going to do some more testing in here in order to make it less too good to be true. You can see the Sharp's not crazy, but the Sortino's better, of course. It's Bitcoin. The heavily optimized, if we look at the regular return here, let's just look at the non-optimized return here. The exposure time is 75%. So most of the time it's in there, but you can see it's a 29,000% return for buy and hold, but 192,726% for this strategy here, dude. It's too good to be true. So what I'm going to do today is I'm going to do everything I can in order to test it. Maybe some permutation tests, maybe some out of sample tests, maybe some walk forward testing. I don't know. We're gonna try it all, dude. But I believe code's a great equalizer. That's why I share all this stuff. And yeah, dude, just keep giving. You can have anything in this world if you lead with love. I promise you. I promise you, dude.